So, hello, and a massive hello to everybody. How we're all doing, rocking and rolling in a free world. Here we go. 6th of January, 2019. No trade calls, recommendations, or response for their own stuff. We're here for educational purpose only. So, what's going on? Welcome to another day in paradise, as we like to say. Interesting week shaping up. We do have an awful lot of econ data. We've got Fed minutes, we've got BOC decision, but again, it's all really going to be about, headline risk and how we react following, the wheeling and dealing we saw last week, and with the first full week of the year, right, where we have everybody's back, Japan is back, everybody in Europe's going to be back, US is already back, but we should see full liquidity back in the market, so things start to get interesting. Now, going into this week, before we talk about the some of the technicals and some of the things we've been looking at, the overriding theme, I think, and feel is the following, right? We've had this aggressive sell-off in the markets, again, also aggressive sell-off in crude, right, as they're going hand in hand. And I think what we will see is most participants, most talking heads, and everybody starting to decide if what we saw last week, right, what we saw from the Fed, what we saw from the Powell speech, what we saw from the Three Musketeers speech, so Bernanke, Yellen, and Powell, especially with Yellen referencing a lot 2016, is have we seen the Powell put, right? Essentially, have we seen the central bankers once again put a floor under the market? And a lot of people are going to, I suspect, draw analogies to what happened in 2016, right? And so is this the next, is this the global coordinated efforts here, once again, a la 2016, where we had, first of all, China injecting a lot of liquidity in the markets, right? And the 3M, right? Three Musketeers coming in, trying to put a floor under the market. So I think that's what a lot of people are going to be talking about. That's what a lot of the talking heads are going to be. And the narrative from the buy the dip crowd, etc., is going to be that essentially this is the dip. That's it. We've had it, right? They're going to start talking about, keep in mind, see how the first 5 days in January close. They're going to be talking about the January effect. They're going to be talking about all these things. And essentially the narrative is going to be that that's it. We're going back higher. Back to the same thing we've seen since 2018, where essentially 208, 209, where the central banks came in and saved the market, and were all these dips, basically election, we're coming in and it's predestined, we're getting new highs. Now, the way we're going to look at it, and you can see that is very similar, to what happened with the big crude oil breakdown, right? When we traded sub 40 in 2016, and then we ripped back higher. So that's going to be the narrative, right? The way we look at it is a little bit more simplistic and less complicated, and we're just going to look at the way the chart is trading around key zones, and without trying to put too many technical factors in here, because a lot of things are going to line up. This is the way we're looking at it. So we had that famous or infamous box, if you remember, that we put in at the beginning of last year, where we said we would not be surprised early on if we'd spend the whole year in this range, right? Choppy year, because a lot of things still had to be resolved. And then what we had is we had the false break, at which point we got very aggressive to the short side. And even though we suffered a little bit in the chop in the middle, our base case was for a move all the way back into the 200-week moving average. And our base case is still that unless we get some kind of save from the China tariff talks, is we're going to have to go back into the scene of the crime, back to neutral, which for us neutral is where it all started on election night. Okay, we've discussed this in detail. Now, having said that, how are we looking at it now technically? Is this box is still in play. And we said in terms of resistances to sell into if you're looking for that move lower, there are two key areas, right? Well, there's one key area, and it starts with the shaded area that we had, which is the bottom of the box, and essentially it finishes into the 2600 mark, right? So what does that mean is if you go, why the 2600 mark? If you go back on the daily, you see this was the box inside the box. Remember the all those sell opportunities, we had that live short here, very tight risk reward, and the where it was bouncing, where the market tried to hold at that 2600. So right here, so that's just to frame it. Let's go back on the weekly, which is just a little bit easier. The way we're looking at it is you have this box, and then we have the box which is inside the box, right? So our base case is the following. As long as we're below the red box, for us, this is a sell rally, right? For ultimately a retest back down into election night area. Should we trade back above the box, which is around back above the 2800, our base case is that the market is going to have to test those highs, and then this is going to be a bull bear line. We'll see if it's you know, what opportunities we may get around there. And as long as we stay in, if we regain back inside the box, and as long as we stay inside the box, we're going to make a shocking call, which is going to be, we would not be surprised if, unless we get a resolution, we spend most of the year trading inside that 2800, 2600 range, which depending if you're coming to the upside or the downside or wherever, it's about 7 to 8% range. So that's where we are. We're not going to be let the news confuse us. We're not going to make it more complicated than it should be, but that's the way we're focusing on this, okay? Right now, going into the week, it's going to be very, very interesting to see how the market behaves inside this 25, 30 to 26 level. Are we going to get sellers or not? It's going to be a very, very good, very, very interesting indication. Don't forget, market's still very complacent. Market, a lot of illiquid market conditions, and we still have an awful lot of headline risk out of Trump, out of Washington, out of Mueller, across the board. Now, taking us back to another key piece of the puzzle is crude, right? Oil. And again, right here, we're holding our two extremes, right? What we said is what we were looking for is we were sellers inside the 70 to 75 zone, and we were essentially buyers inside the 50, 45 zone. We expected these areas to give interesting tactical opportunities to the short side and the long side. Now, in terms of broader picture, now everybody who's been following these updates knows that since we closed below the 200 week moving average, and because of the uncertainty and because of the way we're trading, our base case was that no attempt for longs until we traded back above the 200. We preferred to pay a wider stop, but wait for it to base back above here. And so right now, the outlook is still the same. It's trying to base where we'd expect it to base. We would not have been surprised to see it overshoot into the 40s. We have no position on here. And if we trade back above the 200, we would not be surprised to see $10 aggressive squeeze to the upside. But equally, if sellers step back in at the 50 mark, we would not be surprised to see $10 quickly to the downside. Now, is that a very clear forecast? Absolutely not. That's why we're not trading it, because we don't see an awful lot of edge here, okay? Now, but that's the way we're looking at it. Now, the other piece of the puzzle is going to be the DXY, right? So in terms of DXY, this hasn't changed for us, and our base case was still we were sellers for a move back at the 96.20s, 96 level, and so far so good. here we're at a key inflection point as the 200 here on the weekly. Hey, surprise, surprise. Guess how? You see how it's the 200 across the board as the 200 is trying to hold here. Now, we would not be surprised to see some attempt for this to bounce, but our base case has been and will remain any bounce. This is all a sell zone, and we hold swing shorts as far as we're concerned. We hold swing short position. Our view is still short unless we get daily closes above the 98s, and our base case is that we have to come back and test this 50-week moving average, potentially all the way back into the 92s. We've discussed this in detail, so I'm not going to go through the whole bigger picture view, but that's still where we are. No big change there. Now, the tricky thing here, which I suspect a lot of people are going to be focusing on, is essentially when you look at the, actually, no, let's do it a different way. When you're looking at the Forexes, everybody's going to be focused on those weekly candles on the individual pairs last week, right? Now, what does that mean? That means that, I just saw loading the wrong chart template. Sorry, let me get back on the weekly. So what that means is that you could easily have a very simplistic view here. And I think it's far from clear. So the simplistic view is to say big reversal candle, Aussie, Kiwi, CAD, right? Cable. Essentially, what is this saying? This is saying, okay, dollar is going to get smashed. Look for risk on to come back into play and for dollar selling to come into play. Now, I would be a little bit cautious. See, this is the tricky thing, is that if you just look close and you don't follow the news, you don't follow the markets, this seems to be like a no-brainer, right? Any dip has to be a buy, right? And you're looking for this to come back into this cluster. Any rip is a sell, right? Any buy, any dip is a buy, and you're looking for these to come back into the clusters of the moving averages, right? And this is a time where context is slightly different because, you know, big question, are those candles any more or less significant because they happened during low liquidity holiday week or not, right? I'd be a little bit careful with those. Because that's also in line with what the market is doing. So I think it's far from being extremely clear. Our broader view on Aussie is still very bearish fundamentally if you look at the Aussie economy. So again, these could easily rally, but this could be, you see, this could be in line with that ES rally all the way into the 2600, and then that's the sell, and we continue lower. So I think it's tricky to position for to be very, very confident about a bigger picture view here, okay? So everything is pointing for these to try and rip higher. I'd be a little bit careful and expect everybody's going to come into here trying to fade any move for a continuation of those weekly closes. Now, I will continue to say that, again, we're flat on our commodity currencies, well, especially Aussie and Kiwi, and no interest in participating in cable here. And I prefer not to be involved in these now. I prefer to focus on yen, euro, and CAD, even though the tactical trades seem to really be fairly clear shorter term on that Aussie and that Kiwi, but I just don't really trust those holiday candles. Now, what does that mean? That means, let's go back on our three charts. And so these were the swing charts we had going back into the latest, that FOMC, the Fed decision, right? And what were we looking at? So yen, this is still in play for us, right? This has been a very good trade for us. Short yen, right? We went for that short, looking for that 110 to come into play, ultimately the 104 base end, and this is finished. So right here, I would still expect any rally here to be an interesting sale on the yen. the risk reward is not as interesting, and the stop placement is far harder than it was when it was hovering here at highs. But the base case for us is still the same, is that we're stuck inside the sideways chop, and that 100 is going to be tested. That also falls in line with our view on equities. They can easily rally, but tech is broken. The earning guidance from Apple is just the start. It's not just Apple. All the companies are going to start to warn. We're still not out of the park on a bunch of things. So unless there's a miracle save, a global CB intervention, a miracle save on the China front, unless there's Mueller investigation goes absolutely nowhere, right? We still think there's a lot of complacency, and that mixed with a lower liquidity means we're still got a lot more risk off coming. So our base case is still that yen is going to test this 100 mark. So going into the week, I would very much welcome any rally as an opportunity to get back short if you plan up on those positions. But right here, as interesting as it may seem, you cannot get aggressively short into these wicks, right? It's just not the path to the long-term consistent track record building, right? So here it's still stuck, but any kind of rally and risk and any kind of rally on this, we still think this is the most interesting chart. Now, in terms of CAD, we finally got that move back into more neutral territory as we're looking off those highs. So you see here, we've come back to the 134, and it's all going to be about polos, right? If you look at this on the weekly, right, there you go. This is an extremely key point, right? Is this just a cocaine-fueled rally and it's going to give everything back, or we're coming back in the cluster of moving averages once the BOC comes in? Are they going to hike? Are they going to hike? This is another classical example where the risk reward is just not that interesting, right? Look at off those highs, right? That big resistance, but look at that cluster of moving averages. It's just not that interesting. This is a classical, in terms of a bigger swing, example for this is not expensive enough for us to sell and not cheap enough for us to buy. Now, if you're looking at it at a shorter term, clearly most people will say, okay, this has come back a lot and this is a buy for a bounce, but keep in mind, it's bouncing off that previous weekly candle as we discussed. So don't be surprised to see a lot of people, even the shorts, even potentially trying to buy this to get short on the bounce, right? Back into mid-channel or back into the 50 back of the move from A to B, looking at that 50 back as being a sell zone. So they're interesting areas, but keep in mind that as much as you'll have people very, very interested in playing both ways, right? Predominantly the guys saying, this is it, that's the big reversal candle, this is breaking, we're coming all the way back towards the 130 zone. And the long saying, no, 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 this is just a healthy retracement back into a cyclical and important support. This was just a BS move on low liquidity. We're going back up and we're going to rip higher. So it's a tricky one. I would not be interested in doing anything until the BOC. I think we'll discuss this week, but once we know, we have a better idea in terms of what risk is doing, what the BOC is doing, and what crude is doing, this is probably a more interesting trade. Now, and last but not least, in terms of euro, no change. We have been buyers of the 113, and we've been working this position. Again, we're looking for this to try and break higher. Keep in mind that January is not a beautiful month, to put it mildly, in terms of seasonals for euro. But our base case still, and again, here, whatever happens, it's not a big deal since we've been working the position so much. It's still going to be, the way we're looking at a combined position is still going to be a winner in terms of trade. But our base case is still that this broader area is going to hold, and we're going to continue to see a move higher, potentially all the way back to the 118, but that's really not the focus now. The focus now, similar to the ES, right, is we're kind of stuck in this box inside a box, right? Box inside a box, and we'll have to wait and see how this trades. But it's an interesting week. We'll have to see what the liquidity does once it comes back, but I don't think we have anything that is shouting Awesome opportunity, awesome opportunity. There's a couple of interesting trades which are already in play, but I think the focus is going to be on, you know, is the beginning of the week going to offer some extension, some continuation of the moves that will give us far better risk reward in terms of getting short or getting long. So let's see what we get. A bit of a longish video this week, but I think it's interesting. Okay, have an awesome one, guys. Talk to you guys soon. Take care. Bye bye.